Good morning, everyone. Today's session, we will be discussing earnings per share, at least for the major part of it. And yesterday's sessions, the last part, that is modification of uh, stock option plans, we will be discussing towards the end, because I think I want to do one question with you all, though I had given it as homework. Okay, so we first focus on the standard for today. कल जो कल का है वो बाद में देखेंगे. Okay, so good morning Manini, good morning Gauri Shankar Rao, good morning Shailendra. Okay, so let us start up with Ind AS 33, that is earnings per share. Okay, so you already had a particular standard in your IGAP, that was AS 20. Okay, we had AS 20, which also had the same name, earnings per share. Good morning, Sumit. Good morning, Soham. Yes. So we had this standard AS 20 that dealt with EPS. So basically, the concepts that we are having here in Ind AS is largely similar to what we had in AS 20. So wherever you see changes or wherever you see differences, they will be on account of, say, application of other standards. For example, we are having, suppose, a convertible debenture in our capital structure. So the way in which we calculate our diluted EPS will be different in Ind AS because of the presence of financial instruments chapter, not because of Ind AS 33. So Ind AS 33 is largely same as AS 20, so there won't be any great differences in that regard. Okay. So coming back, why is this is a very important standard from examination perspective also, and practically also this is one of the key figures in your financial statements. So where do we show this EPS? Well, it is shown on the face of the P&L. Face of P&L. So it is such a critical figure. Okay, matlab it's not just hidden somewhere in the notes, it is visible on the face of the P&L. Why do we disclose it on the face of the P&L? What is the relevance? Well, technically speaking, your EPS is of the most maximum importance to analysts, investors, all these kind of people. Why is it important to them? Well, it acts as a bridge. EPS acts as a bridge between financial reporting and SFM. Okay, it acts as a bridge between financial reporting and SFM. When I talk about this, what does it mean? Financial reporting means determination of profit. And when I talk about SFM, it talks about market price. So essentially, this is a bridge between my financial statements and my market price. How is that, sir? You know this PE multiple, right? You know this PE multiple. So the PE multiples are there. You have the EPS, you multiply the EPS with the PE multiples, and you should be able to predict the selling price of the company's shares in the future. Okay, so that becomes the that is the reason why this EPS is a crucial figure in the financial statements. All right, coming next, all of us know that there are two types of EPS. One is your basic EPS, the other is your diluted EPS. One is basic, the other is diluted. Okay, when I talk about EPS, earnings per share, suppose I have certain preference shares, suppose I have certain equity shares. In equity shares also, I have equity shares with differential voting rights. In equity shares, I have equity shares having a preference over the other equity shares. So when I talk about earnings per share, it is from the perspective of which shareholders? It is from the perspective of which shareholders? It is from the perspective of that shareholder who is last in line, to receive the net assets on liquidation of the company. तो थोड़ा सा sophisticated language में अगर बात करें, then it is nothing but earnings per share is calculated from the perspective of those shares which are subordinate to all other shares present in the capital structure. So बहुत अंग्रेजी हो गया, थोड़ा सा simple. Okay, so EPS is from perspective of those shares which are subordinate to all other shares in the capital structure. In the capital structure. Okay, it's not just equity. Sometimes you may have equity shares with multiple voting rights, differential voting rights. Some equity shares may be preferred over the others. Okay, so considering the variety of shares that we can have in our capital structure, by kiske perspective se we calculate EPS? We calculate it from the perspective of those shares which are subordinate to all other shares in the capital structure. That means what? After fulfilling your preferential liabilities, after paying off your loans, unsecured loans, creditors, after paying off the preferred equity, after paying off differential rights, उसके बाद जो बचता है, the net assets, who will be entitled to those net assets? EPS is calculated from the perspective of those shareholders, from the perspective of those holders of shares. Is it okay? Yes. So that is how EPS is done. So the basic query, the basic formula that we have for EPS, all of us know EPS is nothing but net profit attributable to equity shareholders divided by, can somebody help me with the denominator? Weighted average number of equity shares. Weighted average number of equity shares, which is WAINS, and this is net profit attributable to equity shareholders. So this is the standard formula that we all have. So you all know weighted average number of equity shares, you know net profit attributable, but we will just quickly revisit what do we mean by weighted average number of equity shares. Then we will discuss net profit attributable to equity shareholders. उसके बाद divide तो आप कर ही लोगे once we get the understanding of these two. Then we move on to discussion of bonus issue, rights issue today. Then we discuss what is there in the numerator, any adjustments required to the numerator. And that should kind of conclude our discussions for today. Maybe I will briefly introduce diluted EPS. Okay, should briefly introduce diluted EPS before we conclude our discussion for today. We'll be having a session on Tuesday, and I think so, I'm not very sure, may get a schedule on Thursday also. So with that, we should be in a position to conclude this standard. Okay, so the good part about this standard is no journal entries, no financial statements, no debit, credit, nothing. The other aspect is it's purely conceptual. Okay, purely conceptual, and just have your calculators at the tip of your fingers. Okay, so let us start with the EPS. Sir, earnings per share की बात हो रही है. It should be just net profit divided by number of equity shares. ये weighted average किस लिए? Why do I have a weighted average? Okay, so let us consider two entities, entity A and entity B. Okay, now the PAT, profit after tax, of both these companies look something like this. Okay, profit is, let us assume this is net profit attributable to equity shareholders, 1 lakh rupees. Okay, both have a profit of 1 lakh. Number of shares, I'm keeping it quite simple initially. Okay, number of shares is on 1st April 2021. Let us assume that number of shares is rupees, sorry, not rupees, 10,000. Number of shares is 10,000. And here also it is 10,000. Here also it is 10,000. Now on 31st March 2022, okay, on 31st March 2022, we are having another 90,000 shares entering the capital structure of A, entering the capital structure of A. So therefore, 1 lakh shares here, 10,000 shares here. Okay, so total number of shares अपने को addition आता है 1 lakh and 10,000. तो हम लोग चलेंगे and then we calculate the EPS. EPS in this case is PAT divided by number of shares. So that comes to ₹1 for A, and this comes to 1 lakh divided by 10,000. This comes to ₹10 for B. Am I right? Yes, I'm right. Okay, this comes to ₹10 for B. Okay, so that takes care of the calculation per se. But now, my friends, just tell me, is this calculation making sense? Is this calculation making sense? If not, why is it not making sense? Okay, why is it not making sense? What is wrong in this, you feel? It's not right is what Manini is telling. Oh, good morning, Srishti. Good morning, Venkat Subramanian. Good morning, Hari. What is wrong in this? Just a brief description. You don't have to calculate and tell me, or you can write whatever you feel the briefest. No, as dividend will be given to 10,000 only is what Kaushiki is telling, which is not the case. Which is not the case. Dividend, once 90,000 enters the capital structure, dividends will go to them as well. Manini is saying 90,000 shares are added later on 31st March 2022, which is exactly my point. This 10,000 physically entered the capital structure only on 31st March 2022. Means what? Understand. The capital base of A, was 10,000 equity shares for most of the year. Only on the last day of the financial year, 90,000 equity shares were issued and allotted. 90,000 equity shares were issued and allotted. So what do we do in that case? That is why the standard tells we should go in for a weighted average number. So what do we mean by a weighted average number? Well, for A Limited, we will calculate it as 10,000 shares were in force, were present for the entire 12 months. Whereas this 90,000 shares were in existence for only 1 day out of 365 days. Okay, so therefore, if I have to calculate the weighted average number of equity shares, 90,000 divided by 365, this gives me 247 shares. So my total shares is 10,247 shares. This is just weighted for time. Therefore, now when I calculate my EPS, it is ₹1 lakh divided by 10,247 shares. So that comes to how much? 1 lakh divided by 10247. So that comes to ₹9.79 per share. And this figure makes it quite comparable with that of its competitor, that is ₹10 per share. Okay, which makes sense also. So why do I consider weighted average? Because I have to look at which date the shares actually entered the capital structure. वो मेरा काम है. I have to look at that. If I don't look at that, what is going to happen? We will have an anomaly of disproportion. Okay. A will report 1 and B will report 10, which is actually not the case, So when I say weighted average, I mean the number of shares with time as your weights, Basically, EPS is kind of equating the capital structure, the funds which are available as part of capital, with how you have utilized them to give the profit after tax, Okay. So in the first case, I had 10,000 shares for the better part of for the entire year. So therefore, 10,000 is my weighted average number. In first case, 10,000 was there for entire period, but 90,000 came into existence only on the last day. That means whatever profit I have generated on account of that 90,000 shares coming into the capital structure, that profit was generated only for one day out of the entire 365 days. And that is why we will have to do a weighted average working for equity shares. Okay, for my Vane's calculation, we will have to do a weighted average working. Is it okay? Yes. Okay. So now the next part, see, these are all things which you already know. So I'm kind of moving ahead with it. You would be having something known as partly paid shares. Acha hai kya? Of course rehta hai na. So when you have partly paid shares, these partly paid shares would typically be entitled to proportionate dividends. What do you mean by proportionate dividends? Well, proportionate dividends means that suppose you have paid 40% of the face value, आपको डिविडेंड जो मिलेगा that will be 40% of the total dividend which is being declared because आपने पूरा पैसा दिया नहीं है, you've not paid the entire amount. Okay, so partly paid shares के केस में how are we going to do the working? Well, the working will be done as convert to equivalent fully paid shares. Okay, so suppose I am having 10,000 equity shares of rupees 2 each, of rupees 10 each, sorry, rupees 3 paid up. So what does it mean? This is nothing but 10,000 shares into rupees 3. That means I got rupees 30,000 divided by 10,000. So that is equal to, sorry, wait 1 second, divided by 10. So that is equal to 3,000 equity shares fully paid. 3,000 equity shares fully paid. And I will base my EPS calculation on 3,000 equity shares because in my capital structure, what I have received is essentially only 30,000 rupees. I have not received 1 lakh rupees. I have received only 30,000 rupees, which is the equivalent of 3,000 equity shares. So the next point is when I talk about equity shares, if it's partly paid, I will be converting it into fully paid by taking the equivalent number of shares, Okay, I'm kind of brushing the concepts. Okay, just don't worry. We are just refreshing our memories with whatever we had studied in your intermediate. Okay. I have shared this content with you. That is, first one is basic EPS, this theory, and I have also shared this in the assignment section. So we'll be just running through these examples in a short while from now. Okay. So let us come to your notes. We'll write a couple of points. So then we can proceed further. Okay. So basic EPS. Okay, so first what we are going to discuss is basic EPS, which will be our discussion for today. Okay, so EPS is equal to net profit attributable to equity shareholders divided by what we have seen just now, weighted average number of equity shares. I abbreviate this as WAINS, and this is net profit attributable to equity shareholders. Okay, so first we will discuss about WAINS, weighted average number of equity shares. What is it? It refers to essentially number of shares weighted for the duration they were present in the capital structure. Number of shares computed as a time-based weighted average. As a time-based weighted average, where number of days or months for which shares are present in the capital structure, उसको क्या बोलते हैं? That is number of shares outstanding. Okay, are considered as weights. Are considered as weights. Okay, so this is computed as a time-based weighted average. Okay, next one, what we saw, partly paid shares. Such shares are computed as equivalent of fully paid shares, equivalent of fully paid shares, and thereafter weighted for time in WAINS calculations, in weighted average number of equity shares calculations. Is it okay? Yes, these 2 points we discussed, you have also understood. Okay, shall we proceed? Sumit, good morning. Soham, good morning. Yes, all right, so noted down everyone. Yes. All right, so let us proceed to some questions. Okay, these are all very, very small questions. Okay, just don't think a lot. Okay, बहुत ही छोटे छोटे questions है. We will be discussing them as part of our discussions, but the solution is also there, so I don't expect you to calculate it. Okay, it's calculated. We'll quickly discuss and then we should proceed. Okay, so now the net profit, no, this should be fine. You know, cumulative preference shares and non-cumulative preference shares. तो ठीक है, that is okay. All right, we'll write a note on this towards the end of today's class when we come to discussing about the numerators. Okay, but you know the concepts. Okay, so the net profit of Mitra Limited was 200 lakhs. Income tax rate was 37%. The company's preference share capital has the following classes: 12% non-cumulative preference share capital, 200 lakhs. 10% cumulative preference share capital, 300 lakhs. In its accounts, Mitra Limited has provided or paid the following dividends on preference capital. On non-cumulative preference shares, fully declared for the current year. On cumulative preference shares, fully provided for the past years, past 3 years. The company also provided for a dividend distribution tax at 12.75% and transferred 10 lakhs to general reserve. Compute the net profit for the period attributable to the equity shareholders. So first things first, we always consider net profit attributable to equity shareholders. So we will take the net profit, deduct the tax, arrive at PAT, deduct preference dividend to arrive at net profit attributable to equity shareholders. Okay, so now 200 lakhs is your profit before tax. 37% is tax rate, so that comes to 74. So 126 is the profit after tax. Now from here we will be deducting preference dividends. So this preference dividend is on account of two shares. One is non-cumulative, the other is cumulative. What do you mean by cumulative? आप डिविडेंड डिक्लेयर करो या ना करो, you may or may not pay the dividend, but dividend accrues every year. It's a liability on the head of the company at the end of each period. Okay, so you are all aware of this. Okay, so cumulative preference shares means it is provided every year. That means every year we deduct the cumulative preference share dividend because it's provided in the financial statements, and accordingly we calculate the EPS after deducting the cumulative preference shares. So though it is provided for the past 3 years, it would have been deducted in the past 3 years, and therefore in the current period only what is there for the current period only will be considered. Okay, so cumulative preference shares we are going to consider only for the year, because in the previous periods they would already have been considered when the accrual was being done. Okay, non-cumulative means what? आपने आज देने का सोचा, दे दो. नहीं देने का सोचा, liability will not accrue. Liability for dividends will not accrue, and therefore there is no question of accruing it year on year. So therefore नॉन क्यूमुलेटिव प्रेफरेंस शेयर्स इस साल में कुछ हुआ गया क्या? यस, फुल्ली डिक्लेयर्ड फॉर द करंट ईयर. ठीक है, तो खाली करंट ईयर का लेने का. So therefore this is going to be 200 into 12%. Okay, so 24, 30, and at the same time dividend distribution tax also is not going to come to the shareholders, it goes to the government. So 12.75% of that. So once you deduct that, what you are going to have is net profit attributable to the equity shareholders is 65.115 lakhs. Okay, is this okay? Fairly simple. यस, छोटा सा क्वेश्चन था, ज्यादा कुछ इश्यू नहीं है उसमें. ओके, यस, सो वी हैव जस्ट डन दिस क्वेश्चन. These questions typically are not in your study module. We have taken it from the old syllabus. We have taken it from the MCA introductory, from the MCA standard, where some illustrative examples are there. Okay, so it's just for that purpose. Okay, coming to the proper Vains calculations. Now we start up with the Vains calculations. Okay, in a financial year, Ravi issues 80 lakhs equity shares at par on 15th December. Okay, so 80 lakhs at par on 15th December. It had also bought back 20 lakhs equity capital on 1st March. The equity capital was 150 lakhs at the end of the year ending 31st March. Calculate the weighted average number of equity shares outstanding during the period if the face value of each share is rupees 100. Also compute the basic EPF if the net profit attributable to equity shareholders is rupees 10 lakhs. Okay. Acha, sorry. Kaushiki had asked a question. I did not see this. See, this transferring 10 lakhs to general reserve is basically an appropriation. So when I talk about this appropriation, yaar, ye to shareholder ka hi paisa hai. It's the reserve for the ultimate shareholder only. So therefore, it's a mere appropriation. I'm not giving this money to anybody else. So therefore, this impact will not be considered because it's a mere appropriation which is kept aside for the equity shareholders only. So therefore, we are not going to consider this as a deduction for net profit attributable to equity shareholders. Okay, so that was Kaushik's doubt. I think others also have understood this. Okay, so in a financial year, okay, so now this is your question. Okay, so now we have to calculate weighted average number of equity shares. So अपने को क्या दिया है? We are having the issue in the current period, we are having a buyback, and we are having the closing capital at the end of the year. Okay, so therefore can I get opening capital? Closing capital is opening plus fresh issue minus buyback. So if you plug in the figures, your opening capital is going to be rupees 90 lakhs. So if I have to calculate my veins, equity capital is 90 lakhs. That means 90,000 equity shares, which you had at the beginning. These shares were in presence for the entire 12-month period. These shares were there for the entire 12-month period. So 90,000. 15th December, 80 lakhs you have made fresh issue. 80 lakhs means 80,000 equity shares. So half of December, Jan, Feb, March, they were in existence for 3.5 months. So 3.5 by 12. So 23,333. And 1st March, 20 lakhs worth of equity capital is bought back. That means 20,000 shares are bought back. That means for a period of 1 month, 1st March it was bought back. So March 2022, these shares did not exist. So into 1 by 12, this is going to be a negative figure. So when you do this, you will ultimately have a veins of 1,11,667. Have you understood this part? Yes. Have you understood this? Have you understood this? Yes, Srishti, Soham, Gauri Shankar Rao, Hari, Sumit, Aniket Jain is not there today. Shailendra, Kaushiki, Manini, did you understand? Okay, please explain the last part. Okay. See, 1st April, I had 90 lakh shares or 90,000 shares. Okay. These shares were in existence for the entire 12-month period. Okay. So into 12 by 12, no doubt in this. 15th December, 20 lakhs, that means 20,000 shares. These were in existence for 3.5 months. 1st March, I actually bought back. Okay, मतलब मैंने मार्केट से खुद के शेयर खरीद के एक्सटिंग्विश किया उनको. I bought the shares for whatever price, but I bought it back. That means these shares, as on 31st March, do they exist? No, they do not. They do not exist. So therefore, on 1st of March, I am buying back how many shares? 1 second, 1 second. 80 lakh. This is 80,000. Sorry, my bad. It bought back 20,000 shares. Now, it bought back 20,000 shares means what? These 20,000 shares were not in existence. These 20,000 shares were not in existence for a period of 1 month. They were not in existence for the month of March. So therefore, we have taken it as a negative sign. We have taken it as a negative sign for a period of 1 month. So 1667. 1667, that should be giving you your answer. That should be giving you your answer of 1,11,667. Have you understood now? Have you understood now? Yes. Yes. Srishti, did you follow? Okay, all clear. So this is one way of doing. Okay, this is one way of doing. There is another alternative way of presenting this answer. Okay, there is an alternative way of presenting this. So 1st April, we had 90,000 shares till 15th December. So that is a period of 8.5 months. On 15th December, you are having additional 80,000 shares getting issued. So 90 becomes 1,70,000. Okay, plus 80,000. And after 2.5 months, I'm buying back 20,000. So this comes to 1,50,000 shares which are remaining. So now if I do the veins, it will be 90,000 into 8.5 by 12 plus 1,70,000 into 2.5 by 12 plus 1,50,000 into 1 by 12. So that also gives me the same answer. That also gives me the same answer. Which method should we do in the exam? Either of it. Honestly speaking, either of it. But if you were to ask me, sir, which one would you prefer? Or let me ask, which one would you prefer? What would be your answer? Would you prefer method 1 or would you prefer method 2? Would you prefer method 1 or would you prefer method 2? और would you say sir कोई फर्क नहीं पड़ता कौन सा भी कर लो? I would go ahead personally speaking with method 2. I would go ahead with method 2 because you know what happens in method 1? There is a chance that I go wrong in the signage. There is a chance I miss out a movement of capital. Suppose 1st April diya tha, then 1st March would be given and then 15th December data would be given. They would give 1st April, then 1st March and then 15th April. There is a chance that I'll miss the 15th December data in my presentation. But with a timeline, the chances of a mistake are fairly reduced because you actually plot the lines, plot the dates, and you look at the movement. Okay. So there is no question of add karo, less karo, kya karo, kitna time tha. Straightforward. Just take the movement, wait it for time, and you are done with your Vane's calculation. But many people of you preferred the first method. Nothing wrong in that. Okay, absolutely nothing is wrong in that. Okay, so baad mein EPS they asked you, so 10 lakhs divided by 1,11,666, so that comes to 8.96 per share. Okay, 8.96 per share. Okay, fairly simple, nothing difficult. Okay, all right. Compute weighted average number of equity shares in the following case. Balance of equity shares 5 lakhs, issued for cash, equity shares bought back, and balance. So now I want you to try this question by yourself right now. Okay, do it quickly, should not be difficult. Okay, just do it quickly, guys. You can do either method 1, 2, आपको जो कुछ भी अच्छा लगे आप उस हिसाब से करो. Okay. Don't look at the solution which is there on the next page. Be true to yourself. You should be getting your answer. So हम Srishti, Aniket, Hari, Gauri Shankar Rao, Kaushiki, Manini, Shailendra, Sumit. Yes. Just try it out. Two minutes, I need your answer. Okay, just 2 minutes. Okay, so Srishti gave the answer. Anybody else? Soham, Kaushiki, Hari, Gauri Shankar Rao, Sumit, Aniket, Manini. Okay, Kaushiki also gave the answer. Others? Okay, so Manini also gave, Gauri Shankar Rao also gave, slightly different answer. Let us have a look. Show the question. I have not shown the question. Okay, fine. Kaushiki. Okay. Yes. Okay, Aniket Jain also gave the answer. Soham, are you there? Manini also. Okay, Manini gave the answer. That's okay. I don't look at decimal points. Okay. Utna to chalta hai. All right. Just two more answers I want. Two more answers. That's it. Okay, Soham got the answer. One more. Hari or Sumit. Anybody would like to chip in with the answer? Yes. Shailendra. Okay. Manini changed the answer. All right. Okay, fine. So anyways, let us have a look at how the things will proceed. I will look at the second method first and then move on to the first method. Whatever you do, answer should be the same. So we started up with 5 lakh shares. For 3 months, we had 5 lakh shares. Then on 30th June, 1 lakh shares were issued. So 5 becomes 6. Then for 6.5 months, we continued with 6. On 15 Jan, we bought back 50,000. So we have 5.5 lakh shares for the remaining 2.5 months. For the remaining 2.5 months. So 5 lakhs into 3 by 12 plus 6 lakhs into 6.5 by 12 plus 5.5 lakhs into 2 by 12 into 2.5 by 12. So that gives you 564, 583.33. Yeah. So Soham, that second method is more than practical. It's easy because यहाँ पे 3 plus 6.5 plus 2.5, you are easily able to cover 12 months. You can check that. At the same time, there is a far less chance that we end up going wrong. Okay. So some of the students who gave different answers, they forgot the buyback, which is quite understandable. Okay, so that is why I would suggest the second method. Okay, so Gauri Shankar Rao, did you see the answer? Okay, 5,75,000. Okay, and then if you take the first method, 5 lakh shares were in existence for entire 12 months. So 5 lakhs, 30th June, 1 lakh. So it is existing from 30th June till 31st March, 9 months. 15 Jan, you bought back 50,000. So 2.5 months, these shares were not there. So into 2.5 by 12. So when you subtract it, you will get the same answer. Okay, so I think there may be a couple of just incorrect calculations, but conceptually, I don't think any of you would go wrong in this. Okay, I don't think anybody would go wrong. Okay, so all clear, guys? Everything is fine. Any doubts? No doubts? All clear. Okay, so Kaushiki has confirmed. So we move on to the next part. Okay, we move on to the next part. All right. Now let us proceed to the next question, which has partly paid up shares, Okay, so during the year ended 31st March, Giant Limited makes a public issue of 1 lakh equity shares of rupees 10 each, which was fully subscribed. The calls were made as rupees 5 on application and allotment made on 1st July, rupees 2 on first call made on 30th September, rupees 3 on second and final call made on 1st January. Okay, so it is being paid in parts. Partly paid shares are entitled to participate in the dividend to the extent of amount paid. So proportionate dividends are there. The company had 5 lakh shares outstanding at the beginning of the year, and apart from the public issue made above, there were no other changes in the share capital. Compute the weighted average number of equity shares for calculating the basic EPS. Very simple है. I have done it using the first method only because इसमें buyback वगैरह का कुछ issue नहीं है. But if you would like, you could do the second method also. You will get the same answer. Okay. So how do I compute weights? Well, 5 lakhs fully paid shares were in existence for 12 months. So that is 5 lakhs. On 1st July, you have issued 1 lakh shares with a 5 rupees paid for the purposes of allotment. So out of 10, 5 is paid. That means only 50,000 you can consider being the equivalent number of shares. So 50,000 into 9 by 12, that gives you 37,500. Because only 50,000 shares के हिसाब से पैसा आया है आपके capital structure में. Okay. Rupees 2 on the first call. So here we take it 2 by 10, that is 20%. So this comes to into 6 by 12. It was made on 30th September. So 6 months these shares are there. And finally rupees 3 on second and final call made on 1st January. Okay, so that is Jan to March. That is a 3-month period. So that comes to 3 by 12. So 7,500. So total karoge, that comes to 5,55,000. Baki, if you want, you can do the other way also. Okay, is this okay? Yes, all clear. Saksham Lohia. Thank you. Okay, so all right. Fine. Is this clear? Yeah, partly paid shares, all clear. Yes, any doubts, any questions, any okay, so Manini has confirmed, Shailendra has confirmed. I'll need a couple of confirmations for partly paid shares. The major part is this. This is important. Okay. If you get the partly paid percentages right, then I think you should not have any difficulty in doing the workings. Okay. All right. So everybody confirmed. Okay. So now we move on to the next part. we move on to the next part, that is calculating the veins only. We are still in veins. Okay, we are still in veins. So compute basic EPS for the following, for the financial year ending 31st March. Opening balance, you had 10,000 shares. 1st June, you have 10,000 shares, paid up amount 70 with a face value of 100. That means 70% is paid. 1st July, buyback of fully paid shares worth means totaling to 4,000 shares. 1st November, issue of shares 6,000 which are fully paid. Net profit for the year, net profit before tax is 12%, is 12 lakhs. Tax rate is 35%. Preference dividend is 5.85 lakhs. So what they have asked you the basic EPS. Okay, so if you look at the workings, it will move something like this: April, June, July, November. Okay, and then you have the number of equity shares with a buyback as well as a fresh issue again. Here you are having partly paid conversion being done, and ultimately period outstanding is there. So when you do the multiplication and the subsequent additions, you should be getting 15,333. Okay, just quickly look at this veins and tell me if everything is clear. You can try the second method right now. You can try the second method right now if you wish to. Okay, you should get 15,333. Veins is clear. Okay, fine. So उसमें कुछ खास है नहीं. Then they've asked you to calculate EPS. So net profit is there, deduct tax, PAT, preference dividend. So you are left with this net profit attributable to equity holders divided by weighted average number. So that gives you 12.72 per share. That gives you 12.72 per share. Okay. All right. Clear? Srishti has confirmed, I think. Okay, Aniket Jain has confirmed. All right, so let us then proceed to the next one. At the beginning, a company issued 1,20,000 equity shares of 100 each. 50 per share was up on that date, which was paid by all the shareholders. Remaining 50 was called up on 1st September. All the shareholders paid the sum except one shareholder having 24,000 shares. The net profit for the relevant financial year is 2,64,000 after dividend on preference shares 64,000. Compute basic EPS for the year as per Ind AS 33. Okay, all right. So 1st April कितने share issue हुए थे? 1,20,000 equity shares on 1st April, but it was partly paid, only 50%. So 5 months up till 31st August, that is 1st September. Okay. Into 5 by 12. So that comes to 25,000. That comes to 25,000. 1st September, 96,000 equity shares. Okay. And 24,000. Sir, why 96 and 24? Well, 24 has not paid. 96,000 have paid. So in respect of 96, this becomes 100%. 24,000, it remains at 50%. So for 7-month period, 96,000 comes to 56,000. 96,000 shares becomes 56,000 weighted average number of equity shares, whereas 24,000 becomes only 7,000, So that comes to 88,000, and then 264 by 88, that becomes rupees 3 per share. Okay. The major important part here is, what do we do in case some shareholders pay the full amount, some do not pay the full amount? So your answer is, who have paid the full amount, put it in veins. Who have not paid, proportionately the veins is also going to be lower. The veins is also going to be lower. Is it okay? Yes. Yes. Done? Clear, sir, till now? Okay, so Kaushiki has confirmed, Soham has confirmed, Srishti and Manini. All right. Last question. Okay, nothing different. Bhaskar issued 8 lakh equity shares of 100 each on 15th October. During the year ending 31st March, the company acquired an asset for rupees 25 lakhs, issued 1 lakh equity shares treated as rupees 25 paid up. At the beginning of the financial year, that is 1st April, the equity capital was 5 lakh shares of 100 each. Compute basic EPS if the net profit is 37.5 lakhs. Okay. So we start off with 1 lakh equity shares. Yes. So 1 lakh, sorry, 5 lakh. 1 second, not this one. This one. 5 lakhs. Okay. So we start up with 5 lakhs. This was there for the entire 12 months. So 12 by 12, that comes to 5 lakhs. The next issue that we are having is issued 8 lakh equity shares of 100 each on 15th October. So 8 lakhs, 100 each, 15th October. So November, December, Jan, Feb, March, 5.5 months. And finally on 1st December. Okay. 1st December, what has happened is they got a machinery. When they got a machinery, they have issued equity shares as partly paid. That means it's not as partly paid. That means it's not fully paid as on that date. Kitna pay kiya? 25 rupees per share out of 100 rupees per share. So हमने 25% ही भरा है. Okay. So 1 lakh into 25% into 4 by 12. So that comes to 8,333. So total is 8,75,000. 8,75,000. बाद में it's just a matter of dividing 37.5 divided by 8.75, 4.29 per share. Okay, so that is all that is there in your Vane's calculations. All clear? Yes. कुछ नया चाहिए इसमें अभी? You need anything new in this? Nothing is available. All questions we have discussed, all concepts we have seen. Yes. All clear. Okay, so Kaushiki, Srishti, Manini have confirmed that everything is fine. Yes, Soham, Hari. Difficulty चाहिए, आएगा बेटा, बहुत difficulty आएगा. Okay, all right. So now let us move on to the next part. Okay, that is bonus shares. Okay, this is also something which you have already done. Okay, you can leave about roughly half a page for bonus. Then we'll do some questions relating to bonus, and then we shall come back and write the theory for the bonus. How do we have to consider it? Okay, so leave about half a page for your bonus note in Vane's calculations, where we can revisit it. Okay, now let us look at bonus. Okay, let us look at bonus shares. Bonus. Okay, so now coming to bonus. What do you understand by bonus? Sir, bonus means capitalization of reserves. What do you mean by capitalization of reserves? Sir, जो भी reserves थे, we have utilized them to issue bonus shares. We have utilized them to issue bonus shares. Okay. So suppose financial year 2021. Financial year 2022. Net profit after tax 1 lakh. Net profit after tax 1 lakh. Number of shares 10,000. And here 10K plus 10K bonus. So this is 20,000. EPS is 10 here, 5 here. Okay. Yes. Intangible form of shares. Absolutely right. Okay. So now tell me, the reader of financial statements, from his perspective, is this making sense? Before that, from your perspective, is this making sense? 10,000 bonus shares are issued in financial year 2022, and basis that the EPS figures have been determined. The EPS figures have been determined. Okay, so now you help me out and tell me, what do you think? Are my figures looking good, or there is something wrong? If something is wrong, you need not explain to me entirely. You just tell me what is wrong. Manini is saying no. What is wrong? What is wrong? EPS is diluted. हाँ, वो तो ठीक है. But is it correct, Kaushiki? No idea. Okay, fine. Fine. Okay. Anybody else? Okay. Soham, you would like to answer? Aniket Jain, Sumit Jain, Shailendra, my dear friends, would you like to just tell me whether this looks correct or not? Venkat Subramanian, Gauri Shankar Rao, would you just like to? Okay. All right. Okay. Understand now. When I moved from 10,000 shares to 20,000 shares, when I moved from 10,000 to 20,000 shares, which means that the additional shares are nothing but bonus. The additional shares are nothing but bonus. सीधा सा जवाब देना मुझे. Give me a very simple answer. Has money come? Has money come? Has money come? पैसा आया है क्या मेरे अकाउंट में on account of the extra 10,000 shares which are there? Has the money come? No. Kaushik is saying no. Aniket Jain is saying no. Srishti, are you convinced that no money has come? Good. तो पैसा नहीं आया. That means, can I say that capital base of FY21 and FY22 is same? Can I say this? Answer is yes. Definitely you can say this. Okay. So now suppose you are the shareholder of this company. You are the shareholder of this company. You had invested in 2021 1 lakh. I mean, when the earnings was 1 lakh and EPS was rupees 10. So in 2022, what has happened is the same shares are issued, the same net profit is earned, which is okay. but the EPS has dropped down to 5 rupees. And then you will say, Array, how did this happen? And he will look at 20,000 shares. And then he will say, but कुछ ठीक नहीं लग रहा है यार, 10 का 20 होने से पैसा तो आया नहीं है कंपनी में. Yes, and जब पैसा नहीं आया है, that point of time, how can these two EPSs be so different? How can these two EPSs be so different? They cannot be, right? Problem has arisen because of this 10,000 bonus shares. Problem has arisen because of this 10,000 bonus shares. Sir, wo kaise? See, this 10,000 bonus shares which have been issued, they are shares issued without any consideration. That means what? They were always present in the capital structure. These 10,000 bonus shares हमेशा से थे. Sir, कहां पे? Sir, capital structure में. Sir, where in the capital structure? They were always present in the capital structure, but not in the form of shares. They were present in the form of reserves. Today, when I issue my bonus shares, what I'm doing is basically I'm debiting the reserves and crediting the share capital. But sir, ये तो सिर्फ एक book entry है. This is just a book entry. There is no cash inflow outflow which is happening. And therefore, when I do this book entry, what does it imply? It implies that basically I am making an entry from one account in which balance already existed to another account in order to create balance. From reserves where the shares existed, I pulled out the amount and created equity shares. In other words, can I say that these 10,000 bonus also existed in 2021? Can I say that this 10,000 bonus also existed in financial year 2021? Answer is yes. Sir, दिखते नहीं थे, नहीं दिखेंगे because वो reserves में थे. They were present in reserves. So if you opened the balance sheet, the annual report of 2021, you will not be able to see 10,000. Because you will see that they are present in the reserves. But in financial year 22, they came in equity. आप उसी balance sheet में, if you look in the balance sheet of financial year 2022, you will see that reserves have dropped. And your net profit has, and your equity capital has increased. At the same time, you can also open your DMAT and see where you have the shareholding, your shares, your portfolio. Open your DMAT and see. You will look at FY 2021. Suppose you had 100 shares. FY 22, you are having 200 shares. Then you look at your bank statement and see, यार मैंने तो कोई payment किया ही नहीं. अरे आप payment नहीं किए हो. It is free shares which the company has distributed. So essentially, these shares were present with you, albeit in a different form. So what the standard tells in the case of bonus. अब बात आते हैं standard पे. What the standard tells is, when there is a share issue without consideration, when there is an issue of shares without consideration, at that point of time, you will not only have to consider the bonus shares in the current period when they have been issued, but you will also have to restate the EPS of the prior periods which are forming part of your financial statement. Sir, kya kaha? You will have to restate the EPS of the previous reporting periods which are reported in the financial statements presented by you. In other words, the standard also tells that these bonus shares merely came into existence now, but they were always present in your financial statements. And therefore, what the company is going to do is, for the year 2021, it will have rupees 1 lakh and it will have number of shares as 20,000. So this is going to be 5 and this is already 5. And now This is what your answer looks like. This is what your answer looks like. Acha sir, but agar kuch shareholders are extremely diligent with their study of annual reports, तो वो पिछले साल का annual report देखेंगे, 10 रुपया था, वो आज का annual report देखेंगे, sir this is ₹5, and then he will again ask a question, sir ये पिछले साल तो audited figure था ना, auditors had signed it as ₹10, अभी क्यों 5 हो गया, कैसे हो गया, बताओ. So therefore, to mitigate such queries, what we call this ₹5 as restated EPS. What we call it? We call it as restated EPS. Wherever there is a free issue of shares or issue of shares without consideration, there will always be something known as a restated EPS. There will always be something known as a restated EPS. Why will you need a restated EPS? Because those bonus shares are already in the capital structure, and therefore you will have to consider them in the workings. You will have to consider them in the workings. Is it understood? Yes. So now when the reader of financial statements looks at ₹5 and sees the words restated, he will then understand that ठीक है, so because of bonus shares उन्होंने restatement किया है. They have made a restatement. Is it okay? Yes. All clear? Treatment समझा अपने को? Yes. Manini has confirmed. Srishti, did you follow? Gauri Shankar Rao followed. Aniket Jain followed. Sumit Jain followed. Shailendra. Saksham Lohia, did you follow? Yes. Okay. So Soham has asked a question. Sir, would it not be logical to completely remove the impact of bonus issue from the EPS chapter itself? Well, the issue is that look at the words of the standard. It is earnings per share. It is earnings per share. It is not saying earnings per share excluding free shares. Okay. So because it is earnings per share, all the shares in your capital structures have to be considered, and that is why we will have to take the bonus shares also. We will have to take the bonus shares also. Is it understood? Yes. अपने को समझ में आ गया? कोई डाउट? Anybody has any doubts? Okay, so हमको समझा. Aniket Jain, Kaushiki, Gauri Shankar Rao, Srishti, Shailendra all have confirmed. Okay, fine, fair enough. So then let us move on to the next part. Okay. First Jan, 1 lakh shares. Okay. We take a calendar year example. Okay. Calendar year. 1 lakh shares. 31st March, 50,000 shares. 50,000, 50,000 shares. 30th June, bonus shares 1:1. Okay. October 31st October, one lakh shares. Okay, so this is your question. Okay, so suppose you are having a situation where at the beginning of the year you had 1 lakh shares. 31st March you had 50,000 shares, fresh issue. 30th June, there is a bonus issue, and 31st October, there is again a fresh issue of 10,000 of 1 lakh shares. So what I want from you is calculate VANs in this case. Calculate weighted average number of equity shares in this case. Okay. Chalo, come on. Calculate bonus, this VANs, weighted average number of equity shares. It is your calendar year. Okay. Okay, Srishti Goyal gave the answer. Sumit Jain gave the answer. It is calendar year. Calendar year is your reporting period. Calendar year is reporting period. So Sumit and what is her name? Srishti, just have a look again. Kaushiki 3 lakh 4. Okay. Soham, also have a look. Manini, also just check your answers. Okay. Gauri Shankar, everybody is giving different answers. Good. I like different answers. I don't like same answers. Okay. Okay, Hari also gave a different answer. Basically, Gauri Shankar Rao, Hari, Kaushiki, Soham, Manini, Shailendra, Sumit, everybody gave different answers. So I have 6 to 7 different answers now. Okay. All right. Good. Anybody else? Saksham, would you like to chip in with an answer? All right. Fine. So let us start. See, if I put in the timeline, if I put in the timeline, 1st of Jan, 31st of March, 30th of June, 31st of October. So ये रहा मेरा timeline. On this day, I have 1 lakh shares. On 31st March, another 50,000 shares are issued. On 30th June, I have a bonus in the ratio of 1:1. So 1 lakh plus 50, I had 1 lakh 50. So here 1 lakh 50,000 shares are coming. And on 31st October, I have another fresh issue of 1 lakh shares. The question is, sir, calculate the weighted average number of equity shares. 31st December. This is your question. Okay. So now, ये रहा मेरा bonus. Okay. So what many of us would have done is 1 lakh. Sir, ये तो पूरा 12 महीने है. So 1 lakh into 12 by 12. 50,000 is there for 9 months. So many of you would have got this also. Sir, 1,50,000 आप ही ने कहा था bonus है. So it is present for all the period, including the earliest reporting period. So 1,50,000 into 12 by 12 is what you would have written here. Okay. For bonus. Plus October में नया issue. So 1 lakh into 2 by 12. November and December. Okay. So now if you calculate this, how does it look like? So 1,50,000 into 9 by 12, 37,500. 1 lakh into 2 by 12, 16,667. Plus 1 lakh plus 37,500 plus 1,50,000. 304,167. 304,167. Okay, so those of you who got 304,167, those of you who got 304,167, which I can see one, nobody else. Those of you who got 304,167 or getting, this answer is not right. This answer is not right. Sir, but हमने तो sir सब कुछ वैसे ही किया ना जैसे आपने कहा था. 1 lakh for entire 12 months, 50,000 for 9 months. Bonus we have taken right from the beginning. Okay. तो इसमें गड़बड़ क्या है? The problem with this answer is you have taken bonus right from the beginning, agreed. But out of this 1,50,000, beta, the right for bonus arises for the entire year only on these 1 lakh shares. It arises only on these 1 lakh shares. In respect of this 50,000, the rights to this 50,000 arises only on 31st March. No, the right to this 50,000 arises only on 31st March. So how can you take 1,50,000 for entire 12 months period? नहीं ले सकते हो आप, because the bonus, you have a right on that bonus when the corresponding shares are already in the capital structure. Bhai, out of 1,50,000, 1 lakh only was there right from the beginning. 50,000 came into existence only on 31st March. And therefore, out of 1,50,000, 50,000 का जो bonus shares है, bhai, that will also have to be considered only with effect from 31st March, because corresponding shares only have come into existence on 31st March. And that is why this calculation, by saying that, sir, we have considered for the entire period because they were already in the capital structure, does not hold good. This does not hold good. So what do I have to do in that case? Okay. So the standard tells in a very simple way, like when the shares are there, from which period, bonus shares also will come into existence from that period. Bonus shares also will come into existence from that particular period. So therefore, 1 lakh shares were present for the entire period. For one bonus share, you will have 2 shares after bonus issue. Okay, so this is 1 existing plus 1, that is 2. So for 1 lakh shares, after the bonus, 1 lakh shares becomes 2 lakh shares. So 1 lakh into 2 by 1 into 12 by 12. This is your first answer. This is your first working. Okay. So 1 lakh into 2 by 1 into 12 by 12 plus you have issued 50,000 shares. You have issued 50,000 shares. एक शेयर का दो शेयर बन रहा है. One share, one bonus. So 2 shares after the bonus. So into 2 by 1 into 9 by 12 into 9 by 12. So this is what you are going to consider. Next one. Sir, will you consider the bonus of 150 now? Answer is no, you won't. Because already 1 lakh is considered here, 50,000 is considered here. So you will not consider bonus again, it will amount to duplication. And finally, what you are going to have is 1 lakh shares of October. Will you multiply it by 2 by 1? Answer is no, you will not, because these shares have come into existence after bonus was declared, and therefore we will not multiply it with 2 by 1. We will just consider it as 1 lakh into what is given? October. So November, December into 2 by 12 into 2 by 12. So this comes to how much? 1 lakh plus this is 2 lakhs. 2 lakhs plus 50,000 into 2, 1 lakh into 9 by 12, 75,000 plus 1 lakh divided by 6. So 275 plus 16,667. 2 lakh 91,667 shares. This becomes your weighted average number of equity shares for the purposes of our calculations. Have you understood? Yes. Have you understood? Any doubts? Soham also confirmed. Yes, वैसे Soham, did you understand? Yes, you also had given a slightly different answer. Hari, did you follow? Gauri Shankar Rao, did you follow? Shailendra, did you follow? Did all of you guys follow? Srishti, did you follow? Yes. Srishti, समझ में आया बेटा? Yes. Who else? Saksham, Shailendra has confirmed. Yes. Manini has confirmed. Hari has confirmed. Srishti, did you follow? Sumit, Aniket Jain had got the answer that time. Okay, good. Very good. Okay. All right. Good. Okay, fine. Fair enough. Okay. So 2,91,667. So what is this 2 by 1? This 2 by 1, we call it as a bonus adjustment factor. We call it as a bonus adjustment factor. What do you mean by bonus adjustment factor? Kuch nahi. It is post bonus number of shares divided by pre-bonus number of shares. Pre-bonus number of shares. So in our case, it was 2:1. That is 2. That is 2. Okay. Bonus adjustment factor. Bonus adjustment factor. Bonus adjustment factor. Okay. All right. So whenever you have bonus shares, how do I calculate the weighted average? Well, prior to the bonus, you will multiply with the bonus adjustment factor and the time period. After the bonus issue, you will not make any separate adjustment for bonus shares, and whatever shares are issued after the bonus, they will not be entitled to the bonus thereon. Okay, so that takes care of bonus shares for the purposes of our discussion. Okay, so I had told you guys to leave half a page. So in that half page, let us write small theory for bonus and then proceed to look at the questions. Then we shall proceed to look at some questions. Okay. Shares issued without consideration. We call this as bonus or we call this as a share split. आपको जो बुलाना है आप बुला सकते हो. Bonus, share split, etc. In this case, comma, shares are issued without consideration, thereby requiring retrospective adjustments from earliest reporting date, thereby requiring retrospective adjustments from earliest reporting date. That is first day of earliest period reported. Earliest period reported. Okay. Actual date of bonus issue is irrelevant. Typically, bonus adjustments are done with help of a bonus adjustment factor. That is pre-bonus plus bonus shares divided by pre-bonus shares divided by pre-bonus shares. Okay. For restatement, please consider the same number of shares you have taken in the current year to be in the previous year. Okay. Same number. The bonus adjustment factor is multiplied with number of shares issued before the date of bonus. Before the date of bonus. Okay. No separate adjustment needed for bonus shares. Okay, no separate adjustment needed for bonus shares. Numerator, my mistake. Plus post bonus shares. Pre-bonus plus post-bonus shares divided by pre-bonus shares. Okay. In our example, 2 by 1 was the bonus factor. 1 was pre-bonus, another one was post. So pre plus post, 2 divided by 1. So 2 by 1. Done. Manini has confirmed. Hari, I think, yeah, post pre I had missed out. Okay, so it's pre plus post. Okay, so I hope that part is clear. Pre 1, post 2. Absolutely right, Kaushiki. Absolutely right. Okay. हो गया सब लिख के always take no beta, always no, it depends on the bonus ratio, it depends on the bonus ratio. Okay, so we'll be doing a question right now from your study mat. So there you can see that it depends on the bonus ratio. In my example it was 1:1, so for one existing share you are getting one bonus. मैंने कितने बोनस शेयर इश्यू किए थे एग्जाम्पल में? Oh, I removed that example. No, it's there here. How many bonus shares did I issue? See, 1:1. So 1 pre bonus 1. So post is 1 plus 1, that is 2. Okay. So 2 by 1 used to be 2. This is the bonus adjustment factor. Okay. All right. Fine. So that takes care of our discussion on bonus shares. So let us now proceed to Wayne's calculation. We take, yeah. Let us now come to one question. Yes. Yes. Come to illustration 5 of your study mat. Come to illustration 5 of your study mat. See that Manini, that 1,50,000 bonus shares is because I have 1,00,000 shares and 50,000. So 150 were already there. For each share, another bonus share. So 1,50,000 will be the bonus shares. Okay, so that is 1:1 ratio. Okay, so anyways, let us come to this question. Illustration 5. X limited. So you are having 1st January 10 lakh shares in issue. 28th February issued 2 lakh shares at fair value. 31st August bonus issue 1 share for 3 shares held. 30th November issued 2,50,000 shares at fair value. Calculate the number of shares which would be used in the basic EPS calculation, considering the reporting date as year end. Okay. So now in this case, illustration 5. Bonus adjustment factor is equal to pre-bonus. Oh God, what have I done? Okay, this one you mean to say. Okay. Yeah, earlier was correct. ध्यान किधर है आदित्य? It's just bonus, okay? Don't make it post bonus, okay? Okay, this is correct. Pre-bonus plus bonus shares divided by pre-bonus, okay? So now let us come to pre-bonus plus bonus shares divided by pre-bonus. So look at the question. Bonus issue 1 share for 3 shares held. So pre-bonus, if I had 3, I'm getting 1 bonus share divided by pre-bonus 3. So your right bonus adjustment factor is 4 by 3. So Shailendra, like you said, it won't be always 2 by 1. In this case, the ratio is 1:3. So for every 3 shares held, you are getting 1. So the ratio here is going to be 4 by 3. The ratio here is going to be 4 by 3. And now let us proceed to calculate weighted average number of equity shares. Okay. So on 1st of Jan, I had 10 lakh shares. The bonus happened on 31st August. Okay. So 10 lakhs into 4 by 3 into 12 by 12 plus how many shares? 28 Feb. That means 2 महीने बीत गए, 10 महीने बचे, and that is 2 lakh shares plus 2 lakhs into 4 by 3 into 10 by 12 into 10 by 12 plus no separate adjustment for bonus because they've already been included. 30th November 2,50,000 at fair value. So 2,50,000 into 1 by 12. So that comes to how much? You can just calculate. 10 lakhs into 4 by 3. 1,33,333 plus 2 lakhs into 4 by 3. This must be 13 lakhs, I think, into 10 by 12. 222, 222, 2,50,000 divided by 12. $15, 76, 388, 15, 76, 389. कुछ भी चलेगा. Manini, in the last case, we are not going to have into 4 by 3 because this is after the bonus. So in other words, 30th November, those who purchase will not get the bonus shares because bonus was on 31st August. Okay. So if you take the rounding of 1576 388, if you ignore, I mean, if you take the complete decimals, it comes to 1576 389. So either ways, it's the same. Acha, are we put to rest the bonus adjustment factor formula? There was some upper niche from my end. Is the bonus adjustment formula clear? Shailendra, did you understand? Yes. Have we understood now? Have we understood bonus in detail? Yes. Of course, in prior period also the same bonus adjustment factor will be used. The same bonus adjustment factor will be used. Absolutely right. Because that is the proportion of bonus, no? Thereby requiring retrospective shares are issued without consideration, requiring retrospective adjustment from reporting date. Okay. So bonus adjustment factor is multiplied with number of shares issued before the date of bonus. Issued before the date of bonus. Okay. So same factor is going to be utilized. Is it okay? Yes. All clear? Fine. तो फिर हम आगे बढ़ते हैं. Let us then proceed to our assignments. Yes, assignment wala sheet. I am going to leave this for homework. It's what we have discussed already. Okay, so I'm leaving that for you for homework. 11 also I'm leaving it for homework. Okay, all right. Okay, so let us then proceed to the next part. Sir, bonus was an issue free of cost. In the question that we did just now, we are having this statement: issued 2 lakh shares at fair value, issued 2 lakh 50 shares at fair value. So gadi gadi fair value aa raha hai. That means, sir, can I have an issue which is not at fair value? Definitely you can. Sir, can I have an issue at a higher than fair value? Yes, you can, but koi subscribe nahi karega. Okay. So suppose you see a share like Paytm now. If they come out now with an IPO, if they now come on with a further public offer at 2,500, like what they came to 150 at that point of time, if they bring a similar pricing now, kaun subscribe karega? Nobody will subscribe, because now the market value of Paytm is less than 500 per share. Okay, so therefore koi subscribe nahi karega. So more than fair value, nobody will subscribe. Sir, can I subscribe? Can I issue less than fair value? Kar sakte ho. You can do that. In fact, that is what you are going to do for rights issue. That is what you are going to do for rights issue. So can I say that in the case of bonus, it is pretty much clear that all the bonus shares are without consideration? ये तो अपने को clear है. In the case of rights issue, I am issuing my shares below the fair value. That means whatever shares are added to my capital structure, out of that, a particular percentage is without consideration and some percentage is at fair value. Have you understood? Yes. See, rights issue is always going to be below the fair value. Why? Because it is like a guarantee which the company is getting. देखो किधर ढूंढने की जरूरत नहीं. It did not hunt for investors. Existing investors है. It can make an offer and then the existing investors can subscribe. So rights issue is going to be lower than the fair value. That means, can I say that rights issue is nothing but issue of shares at fair value, some percentage? Okay. And can I say that issue of shares without consideration? This is also a percentage. That means whatever shares are added, they are essentially going to be segregated into two categories. The first one is issue of shares at fair value. This is going to be like a normal fair value treatment, which will be weighted for time. And the shares which are issued without consideration, those shares will be regarded as bonus and a retrospective adjustment would be done. Have you understood right shares? Yes, we'll do an example, but concept समझा अपने को? Yes. Did we understand the concept of right shares? Bolo, did you understand? the concept of right shares? Yes or no? Just the concept. Calculate कैसे करेंगे, we will be discussing that. But as of now, if you have understood the concept, I don't need anything else. Okay. So now let us actually proceed to look at the concept. Okay. Let us now actually proceed to look at the concept. Okay. All right. Fair enough. This is, yeah. So let us come to question 12. Let us come to question 12. We'll then be picking up a question from the study module so that you are just aware that what I'm doing is exactly as per the study module. Aapko bhatka nahi raha hu main. I'm not making you lost. Okay. What I'm doing is there in the study module, just that I'm doing some other questions because मैंने इस पे मेहनत किया था. Okay. So I had compiled this. So I'm just taking this up for you. Okay. The following information is furnished by Samantha Limited for financial year 1920 and 2021. Okay. Net profit for 1920 is 22 lakhs. Net profit for 2021 is 30 lakhs. What is going to be your rights issue? There is a rights issue, one share for each 5 shares outstanding. Okay. Number of shares outstanding prior to rights issue is 10 lakhs. The price of the rights issue is 25. Fair value of one share immediately prior to exercise of rights is 32. Last date to exercise the rights is 31st July 2020. You are required to calculate, number one, the basic earnings per share for 1920, restated EPS, basic EPS for 1920 for the rights issue, and the basic EPS for 2021. Okay. Fine. So when is the rights issue happening, sir? The rights issue is happening on 31st July 2020. That means this is 2020, 2021. So can I calculate my basic EPS for 1920? Very simple. 22 lakhs divided by 10 lakhs. Straightforward. So this is your basic EPS, reported basic EPS 2.2. 22 lakhs divided by 10 lakhs. कोई टेंशन नहीं, कुछ नहीं है. 10 लाख शेयर थे, 22 लाख अर्निंग था. 2.2 is my reported basic EPS. Okay. And now comes the story of rights issue. Now comes the story of rights issue. Okay. Sir, what is happening in this rights issue? What is happening in this rights issue? Okay. In this rights issue, we will then take a very practical case. I have extracted one annual report where there has been a rights issue. And I had actually gone through the way the market prices have moved for us to understand which market price is taken, what do you mean by the terms used, and how the things are actually calculated in practice. Okay, so we'll do that one question maybe post break. Okay, but I have kept that for you so that you understand how the disclosures happen in the case of rights issue. Okay, so now coming to this question, what am I having is kitne shares hai? 10 lakhs number of shares. 10 lakh shares having a fair value of rupees 32. You are getting a right share 1:5 at a value of rupees 25. At a value of rupees 25. Okay, so 1:5 means that is 2 lakhs. That is 2 lakh shares. Okay, that is 2 lakh shares. Now please pay attention. Please pay attention. Okay, see, my existing investors will subscribe to 2 lakh shares and pay rupees 25. That means company ke paas, what is the amount that will come? Sir, the amount which will come to the company is 50 lakh rupees. Yeah, the amount which will come to the company is 50 lakhs. But tell me, sir, one thing, is this 50 lakhs fair value for 2 lakh shares? No, it's not. The fair value of each share is rupees 32. Can I say it is 32? No, you cannot. This fair value is before the rights. This fair value is before the rights. Now, when 2 lakh shares have come into existence, can I take this value? Answer is no, because this 50 lakhs is post rights. This is post rights, the money which you are getting, whereas this is before the rights. So आप ये दोनों को compare नहीं कर सकते. You have to calculate something known as a theoretical X right price. You have to calculate something known as a theoretical X right price. Sir, how do we do that? Very simple. You are having 5 shares of rupees 32 each. If you have 5 shares of 32 each, you can get 1 share of 25. You can get 1 share of 25. So therefore, what will be left with the company? 5 shares of 32 plus 1 share of 25, resulting in 5 plus 1 shares, So 32 into 5 means this is rupees 160 plus rupees 25. Please check the workings. Plus rupees 25 divided by 6 shares. Okay. So 160 plus 25 divided by 6. This is your fair value after the rights. I cannot say 50 lakhs paise aa gaye, which is the equivalent of what? How many shares would it be equivalent to at 32 rupees? I cannot say this, because now what has happened is there is a rights issue, and the moment a rights issue happens, my market price falls down. Bonus happens, my market price falls down. Share split happens, market price falls down. Why? Are simple yaar. See, you are having, suppose, market price of a share rupees 1000. You come with a bonus issue of 1:1. That means, are you adding anything? No, you are not. खाली एक का दो कर रहे हो. So instead of 1000 for 1, now you will have 1000 for 2. So the value is going to be 500 rupees per share. So in the case of rights also, the very same thing is going to happen. जैसे ही rights issue happens, there will be a fall in the market price. And that is why what we are interested in knowing is, what is the X right price? Or X right fair value after the right. Okay. 32 is immediately before. 32 is immediately prior to exercise. That means in 32, there is a value of the right which is included. There is the fair value of the right which is included. We have to remove that. So when I remove that, I am going to get 30.833 as the fair value X rights. And now let us have a look at this working. I got 50 lakh rupees on the rights issue. 50 lakh rupees means at 30.833 fair value, I should have issued, divided by 30.833. I should have issued 1,62,162 shares. I should have issued 1,62,162. But how many shares have I issued? Sir, you have issued 2 lakh shares. You have issued 2 lakh shares. That means क्या हो गया, आपने कुछ free shares दिए हो ना, you have given some free shares. How many free shares have you given? 2 lakhs minus 162, 162. So 2 lakhs minus 162, 162. You have given 37,838 free shares, जिसको हम लोग बोनस कहकर बुलाते हैं. सर, इज दिस एक्चुअली बोनस? नो, इट्स नॉट. What you have done is, ideally you should have issued shares at 30.833 rupees, जो आपने नहीं किया. Instead you have issued the shares at only 25. क्यों? अरे सर, राइट्स इश्यू है, हमारे ही इन्वेस्टर है, इनसे क्या हम ज्यादा पैसा ले लेंगे, वो देंगे ही नहीं. So therefore I gave them at a lower price. That means you are giving them a discount. You are giving them a discount of 5.833 rupees per share. You are giving them a discount of 5.833 rupees per share. So either you say discount or you say bonus is given to them of 37,838. Yeah, ultimate interpretation remains the same, that 162 shares are at fair value and 37,838 is free shares, or what we call to be bonus shares. What we call to be bonus shares. Is it okay? So far, have you guys understood? Yes. So far, have you guys understood? Yes or no? Have you understood? Have you understood this part? Yes, sir. Everybody is confirming. Yes, we have understood. Okay. So now let us proceed to calculate. Let us now proceed to calculate EPS. सबसे पहले we will calculate restated EPS for 2019-20. We will proceed to calculate restated EPS for 2019-20. So how do I calculate that? Very simple. Earnings mein to there is no change. It was a past earning. So this remains at 22 lakhs. This remains 22 lakhs. Number of shares, earlier I had 10 lakhs. But now I have a bonus element, no, 37,838. So this becomes 22 lakhs divided by 10 lakh 37,838. 10 lakh 37,838. You can have a look at the answer. Adjusted basic EPS for 2019-20, 22 lakhs by 1037,838. It comes to 2.12. It comes to 2.12. Is it okay? So whatever has been my earnings, whatever has been my shares prior to the rights issue, I will be adding the bonus to that. I will be adding the bonus to that. Is it okay? Have you understood? Yes. Have you guys understood? Yes or no? Did you understand the restated EPS? Yes, Vishal has joined in. Have you understood the restated EPS? ये वाला figure समझा अपने को? I am right now concerned with that figure only. I am not concerned with anything else. Have you understood that? Yes. Okay, Soham has confirmed, Vishal has confirmed, Manini, Srishti, everything is clear. Now Vishal, look, forget all this. All this I'm going to come. What do you mean by adjustment factor, number of equity? I'm going to come to all that. But what I want you to understand is what we are doing is actually the bonus concept only, which we are taking it further into the rights issue. So हमने bonus के लिए क्या पढ़ा था? As on the date of bonus issue, we will have to adjust the shares prior to bonus issue. Adjust the shares prior to bonus issue. That means what? I would multiply it with the bonus adjustment factor. I would multiply it with the bonus adjustment factor. Bonus adjustment factor means what? Basically, I will add the bonus to the existing shares. That's it. I will add the bonus to the existing shares. और कुछ भी नहीं है. Okay. In our example that we saw, that bonus adjustment factor, what am I doing? 1 lakh, I am multiplying by 2 by 1 means what? To 1 lakh shares, I am adding 1 lakh bonus shares. So that becomes 2 lakhs. To 50,000, I am adding another 50,000 shares. That becomes 1 lakh. So here, what I will do is, what I am going to do is, as on this date, initially, I had 10 lakh shares, right? And then there is a bonus issue which is happening of 37,838 shares. So I will add this to 10 lakh. I will add this to 10 lakh. So 10 lakh 37,838. This was on 1st of April. The rights issue closed on 31st July. So April, May, June, July, 4 months. So 1037,838 into 4 by 12. This comes to how much? 1037,838 into 4 by 12. This comes to exactly 3,45,946. This comes to 3,45,946. And later on in the capital structure, how many shares you are having? Sir, later on we are having 12 lakh shares. 10 lakh plus 2 lakh, 12 lakh shares into 8 by 12. So that comes to how much? 8 lakhs. So total weighted average number of shares outstanding is 11,45,946. 11,45,946. So current year's EPS will be 30 lakhs divided by 11,45,946. That comes to 2.62. That comes to 2.62. Have you understood this? Have you understood this part? Yes. Are, did you understand? Yes or no? Yes. Yes. I'm expecting a question. That question is not coming. Vishal ne confirm kiya. I am expecting a question, somebody to ask, sir, why did you take 12 lakhs here? Jabki you have mentioned that after the post bonus period, no adjustments will be made for bonus. तो यहाँ पे तो bonus का adjustment किया हुआ है ना. So how have you taken this? Beta, that would be the case if I had to do the calculations like this. Okay. If I do the calculation like this, the bonus adjustment will not be given. 10,37,838 is there for entire 12-month period. 10,37,838. Now remove the bonus element. So 162 into 8 by 12. 162 into 8 by 12. So 1 second. I'll do it there. I'll do it there. Okay. All right. Not clear. Okay. So this part is done. Now let us take the timeline. We started off with the rights issue on which date? 31st July. Okay. So 1st April 2020, 31st July 2020. I'm coming to adjustment factor. Don't look at that right now. Abhi usko mat dekho. Okay. I will tell you how the things are going to flow. Then I will tell you what is the adjustment factor. Okay. All right. On this date, I had 10 lakh shares. Agreed. On this date, there is a rights issue of 2 lakh shares. Agreed? Yes. This 2 lakh shares we split up into 37,838 bonus and 162 at fair value. Agreed? Yes, sir. Agreed. So therefore, Vanes, I can present it in multiple ways. I can present it in multiple ways. Sir, how can you present? I can say that, see, you have to add the bonus for all the periods prior to bonus issue. So 10 lakh plus 37,838 into 4 months. This is a period of 4 months. So into 4 by 12. This is a period of 8 months. So this is what I have done right now. So this comes to how much? This comes to 10 lakhs into plus 37,838 into 4 by 12. This comes to 345,946. The other side is 12 lakh shares. Now I'm having 12 lakhs into 8 by 12. So this comes to 8 lakh shares. So 1145,946. This becomes my weighted average number of equity shares. ये तो एक method है करने का. Let us look at another method. This was what I explained to you. Let us now look at another method. Okay. Answer same आना चाहिए. 10 lakh plus 37,838 was there for entire 12 months into 12 by 12. So this comes to 1037,838. And now since we have considered 37,838, at fair value, the shares are only 162 into 8 by 12. So 162 into 8 by 12. So this gives you 108. Addition करके देख लो, your answer should remain the same. 1037,838, 11,45,946. So you can take 162 for 8 months, 1037,838 for 12 months. That also gives you the same answer. Or take 1037,838 for 4 months, 2 lakhs for 8 months. That also gives you the same answer. My moot point is, whatever method you solve, your final answer will be 11,45,946 weighted average number of equity shares. Weighted average number of equity shares. And now my current EPS for 2020-21 is going to be how much? Not this one. Assignment question. 30 lakhs divided by 1145,946. So that comes to 2.62. That comes to 2.62. Have you understood the concept of rights issue? I have spent nearly half an hour trying to make you understand the concept of rights issue. Have you understood? Yes. Srishti, Kaushiki, Soham, Aniket, Vishal, Shailendra, Manini, Gauri Shankar Rao, Hari, और कौन है? Sumit, Aniket Jain. Have you guys understood? Yes. All clear? I need everybody's answers on this, because if there is even one student who has not answered, I would want to explain, because it's a very, very important concept. Okay. Everybody has confirmed. Each of you just put in a confirmation. Hari has confirmed, Srishti confirmed, Kaushiki confirmed, Shailendra said okay. Yes. All right. All clear. Okay, Manini wants the explanation again. No problem. We will do it all over again. Okay, but obviously it will be little faster since the facts are known to you. Okay, so now let us discuss again. Okay, see, a rights issue is going to happen. When a rights issue happens, this rights issue is typically below the fair value. Sir, why do you do it below the market value? See, because initially what you had to do was, if you want to go at fair value, you will have to find investors, you will have to present the prospectus to them, you will have to incur a lot of expenses to come out with a further public offer, and therefore those expenses are avoided for you. Why? Because मेरे घर में तो investor है, I have investors in my company, I can just hold a general meeting, an extraordinary general meeting, tell them I want additional funds, will you be on board? These people already know everything about the company, so they will come on board with the project, and therefore you are not going to issue the shares at market price. You will issue them below the market price. And this is where Ind AS 33 tells us that if you are issuing anything below the fair value, there is a discount element which is included in that. Yes, sir. That discount element can be converted into corresponding bonus shares. Yes, sir. And because it can be converted into corresponding bonus shares, it amounts to issuing certain shares without consideration. Yes, sir. And because we are issuing certain shares without consideration, what will happen is we have to do the same adjustments that we did for the bonus. That is, we will have to restate the previous year's EPS. At the same time, all the shares in the capital structure up to the date of rights issue will be added for the bonus shares, which is included in this rights issue. Okay, so the question arises, sir, how do I identify what is the bonus that is included in the rights issue? So the standard gives a mechanism which is fairly logical. So in this case, I had 10 lakh shares having a fair value of 32. I give a rights issue. Those who have 5 shares can take 1 share at rupees 25 each. That means the new price is 25. So therefore, each person will come subscribe. So 2 lakh into 25, 50 lakh is the money which is coming into the company. Sir, 50 lakh to aa raha hai. Can I divide it by 32, which is the existing fair value? Answer is no, you cannot. Jab 50 lakh, 32 is the price before the rights issue. It is the price before the rights issue. That means what? After rights issue, do you think the market price remains the same? It goes up or it comes down? Sir, it will come down, no? Because you have issued new shares below the fair value. That means numerator mein what is happening is the fair value comes down. At the same time, denominator mein my equity shares go up. So therefore, overall, my fair value is going to come down. So that is why I cannot divide 50 lakhs by 32, because 32 is the price before the rights. I need the price after the rights issue. So how do I calculate? The standard tells us what is the shares before rights? Sir, 5 shares. That fair value is 32. So that comes to 160. Plus 1 share you are issuing at 25. So now we are having 6 shares at rupees 185. So the theoretical X right price is 30.833. Theoretical X right price is 30.833. And this 50 lakhs I can compare with 30.833 to arrive at the conclusion that out of 2 lakh shares, 162 shares are issued at which price? At fair value of 30.833. The remaining 37,838 is the free component or bonus shares. The treatment for this free component or bonus shares is going to be exactly what we have already studied. That means I will restate the previous year's EPS. No adjustment in numerator. I will divide it by 10 lakhs existing shares plus 37,838. So that comes to 10,37,838, 10,37,838. And current year's EPS, we will have to calculate what the rule tells us. Any issue that has happened prior to bonus, we will have to adjust it for the bonus. Similarly, the same concept we apply here. Any issue that has happened prior to rights issue, we will have to adjust for the bonus which is included in the rights factor. So we will add 37,838 to 10 lakhs and determine the variance and do the calculation. So this is how you are going to do a rights issue. This is how you are going to interpret a rights issue. Okay. So now let us come to the way the solution is drafted. Let us come to the way the solution is drafted, which is ideally what you will be presenting in the exam. Which is ideally what you will be presenting in the exam. देखो ये जो कुछ भी मैंने अभी ज्ञान बांटा है ना, that is an interpretation of what is there in the standard. But the procedure outlined in the standard is what is there in the solution that is given to you. So let us come to that. Determination of theoretical X rights price. You remember we got this 30.83. You can do it by either of the two methods. We can do it by either of the we can do it by either of the two methods. They have taken total, that is 10 lakhs into 32 plus 2 lakhs into 25 divided by 10 lakhs plus 2 lakhs, or what I did also you can follow in exam, 5 into 32 plus 1 into 25 divided by 5 plus 1. Ratio hai. Ultimately it's a ratio. Answer same आएगा. Okay. Why I prefer this is calculator पे उंगली कम चलेंगी, zeros कम रहेंगे, गलती की गुंजाइश कम रहेगी. Okay. So therefore I would prefer to do it this way, but choice is yours. Okay. So we got 30.83. This was the X rights price which we had determined. Okay. Now coming to the adjustment factor. Sir, what is this adjustment factor? This is what the standard has told. Calculate an adjustment factor being 32 divided by 30.833. What is this? This is nothing but fair value before the rights issue divided by X rights price 30.83. So what you get is 1.04. अगर आपके पास calculator है, take 32 divided by 30.8333. What you are going to get is actually 1.037837, etc. Okay. You are going to get this. Can you see what is this looking like? Can you see what is this looking like? This is nothing but the bonus component. This is nothing but the bonus component which we have already determined, as 37,838, which we have already determined as 37,838. So this is my bonus component. That's it. Otherwise the question, the interpretation is exactly what we have done. Okay, so they have taken this rights adjustment factor. We call this as RAF. RAF means rights adjustment factor. 1.04. Basically it is 1.037838. Weighted average number of shares. Now how do I do? 10 lakhs I multiply with 1.037838. What you are going to get when I multiply this is actually nothing but 10,37,838. And what is this 10,37,838? This is nothing but the bonus component which is included in the rights. This is nothing but the bonus component which is included in the rights. Okay, so 10 lakhs into 1.04 into 4 by 12, this comes to 345,946. And 1st August to 31st March, 12 lakhs into 8 by 12. So that comes to this, and then you calculate the EPS. That's it. Okay, so this is what is the meaning of rights adjustment factor. This is academically how the standard has told you to calculate. This is academically how the standard has told you to calculate. You can follow this for the presentation in your examination. You can follow this for presentation in your exams. Is the answer clear now, the way it is presented for you? Yes. Are you clear with this? Yes. Okay. All clear? Okay. All right. Soham has asked a question. Sir, why the entire bonus of 37,838 is attributed to the opening and not to opening and 162. Soham, 1,62,000 is arising, is taking birth only on 31st July. 37,838 is the bonus which was present in the form of reserves, which is getting converted to equity in the form of the discount that you are giving, and therefore it will be attributed to the periods prior to the rights issue. Thereafter, it is at fair value of the balance shares 1,62,162 are at fair value only. Okay, so that is how we started off with the discussion on bonus, right? That is how we started. In the theory, what we have written is the shares require retrospective adjustment from earliest reporting date. The bonus adjustment factor is multiplied with number of shares issued before the date of bonus. So here what I am doing is the bonus is attributed to the shares in existence before, because even the rights factor is calculated with reference to the shares which are already present in the capital structure. We cannot calculate rights with respect to shares that will be issued sometime in the future. The same concept holds true for bonus. If you understood bonus, you should not have a problem with rights. Is it okay? Yes. All clear? Any doubts? No doubts? Yes. So EPS 2021, we have seen it. Okay. So you will be having a restatement of EPS in the case of bonus, in the case of rights, in the case of bonus, in the case of rights. Okay. So now this is how you are going to do the question in your exams. Okay. So rights issue done, bonus issue done. So what I am going to leave you with is homework. Question 13, do it for homework. What I want you to actually do is, because same things are there. Okay. What I want you to actually do is solve these questions by the standard method also. That means taking the rights adjustment factor. At the same time, try to conceptually calculate the bonus issue included in the rights component, in the rights issue, and do the working. So, you know, your concepts get strengthened by the time we are nearing the end. Okay. So what I want you to do is that one, and based on a similar concept, similar treatment, I want you to try the buyback also. There is a bonus component in buyback, which I have discussed. So what I want you to do is, I'm leaving you with homework for the buyback also. Buyback is not directly there in the syllabus, but it is there in Ind AS 33. Okay, in the study mat, I don't think there is a question on buyback separately, Okay, it is included as a part of Wayne's calculations only. There is a bonus component in buyback also. So I want you to apply your understanding of rights issue to discuss what happens in the case of a buyback. I think you will be able to apply that. You will be able to apply that. Okay, so we'll try this. Just ensure that you try it out. Baki, I'm leaving you with homework for the rights issue. 1 second. There are some more questions from your study module. 1 second. Let me search. See, all this I have discussed in my theory. Okay. Weighted average in case of rights, theoretical compute adjustment factor, restate all shares prior to the date of rights issue, compute EPS for current and restate the EPS. Okay. Wayne's in case of rights issue, I told you how to calculate. So I'm leaving you with this question. Test your knowledge for homework because I have discussed it entirely in detail. Okay. This one we have solved. This one I have left with you for homework. I am leaving this for homework. Illustration 6. I am leaving this also for homework. Question 4, test your knowledge. This also I'm giving you for homework. Okay. So that takes care of bonus issue, rights issue, Wayne's, and now we are left with discussion on the numerator. Discussion on the numerator. Before that, you guys need a break? You guys need a break? Or we can proceed further? क्या लगता है आपको? You guys need a break? Or can I proceed? बोलो बोलो, ब्रेक के लिए शर्माओ नहीं, ब्रेक चाहिए तो बोलने का ब्रेक चाहिए. सृष्टि is saying proceed. Anybody else need a break? Okay, so we take a 5-minute break. I'll extend the class a little bit, okay, because at least I don't know about you, but I am enjoying taking this class. Okay, so we extend the class a little bit. We take a 5-minute break and then we discuss. Today I have to complete numerator part and I will briefly introduce diluted EPS and we do that Ind AS 102 ka question. Okay, so we take a 5-minute break. We shall continue after 5 minutes. Okay, we'll continue after 5 minutes. Okay. Okay. All right. So let us come back to the rights issue discussion. Yes. So we start up with, we'll take one practical case from the report of EIH. I think this is the company where you have this Oberoi. I think so. Okay. So let us pick up this particular case to see how they actually calculate the EPS in the case of rights issue. Okay, so basic EPS for 2019-20, the rights issue happened in 2020-21. Okay, so they came out with a rights issue in 2020-21. 2019-20, the reported EPS was this figure. कितना है वो 124.46 crores divided by 57 crores 15 lakhs. So the reported basic EPS was 2.18, which you can have a look. 1 second. I'll have to open the annual report of EIH. Annual report 2020. Okay, fair enough. Okay. So 2.18 was the basic EPS which was reported in 2019-20. Okay. Now let us come to the 2021 annual report. 2021 annual report where there is a rights issue. Okay. So this is on page number 63 of the annual report. Okay. 1 second. Let us just hope. Oh, no, not this one. It will be somewhere here. Yes. This data is there, which is disclosed in the financials. During the year, that is 2021, the company raised capital by issue of further shares. I hope you can have a look at this. Further shares to eligible equity shareholders on a rights basis in the ratio of 8 shares for every 85 shares held. The shares were issued at a price of 65 per share, which included a premium of 63 per share. Thus, the company issued 53,794,768 fully paid equity shares aggregating to 3,496.66 million. Okay, so this is the rights issue data which is there. Now let us look here. So we were having these many shares in the capital structure opening. So 57 crore 15 lakhs into 8 by 85, that gives you number of equity shares issued 5 crore 37 lakhs, which is what is matching with this figure, 5 crore 37 lakhs. So therefore, the closing number of shares is 62 crore 53 lakhs. This is the closing number of shares. The issue happened on 20th October 2020. The issue happened on 20th October 2020. Okay. Now, if you look at the rights issue timetable, the rights offer opened on 29th September 2020 when the market price was 81.85. The rights offer closed on 13th October when the price was 76.2. So this becomes your X rights price, and later on, 1 second, 76.2. This becomes your before closure market price. Before closure market price 76.2. So my theoretical X rights price is 85 into 76.2 plus 8 into 65. This is the issue price divided by 85 plus 8. So my theoretical X rights price is 75.24. This data is coming from the market, 76.2. On the date of closure of the rights, the last date for exercise of rights, what was your price? That becomes your price based on which you calculate the X rights price. Okay. So we have allotment date, record date, date prior to record date. All these dates I had taken up the market prices for your knowledge, but we will be selecting 76.2. This is the journal entry what you will pass when you receive it. And then we proceed to calculate the rights adjustment factor, which is 1.01281. So the bonus element is 0.01281 in this issue which was made. And then you just proceed with the straightforward calculation, that is the adjustment factor, number of days, number of shares. That gives you the weighted average number, and then you proceed to calculate the basic EPS. Okay. So the bonus element in this issue is actually 73,19,225. Okay. Issue at fair value, actually issued. All this data we had collated for the purpose of your understanding. Okay. So all of this is specifically mentioned in the annual report disclosures. Okay. So we move on to earnings per share. There all these disclosures were available. Okay. So 1 second, where is that earnings per share? Credit risk. These financials run into so many pages. ये तो console हो गया. Anywhere post-employment benefits, related party, maturities, interest rate risk. इससे ज़्यादा तो यही है. Did I mention where is the page 146 of annual report? 146. That means these are the number of shares in the annual report. Okay, so here they have given the number of shares. So with that, we have determined the EPS. Okay, and that is how they have actually done. So in reality, this is how you calculate the earnings per share in the case of a rights issue. Okay. So that takes care of rights issue, that takes care of bonus issue, that takes care of all these issues from your academic perspective. Okay. So now coming back to our theory, we had written something for bonus, and now we did some questions on bonus. So then let us move on to write something for rights issue. Okay. Third point was bonus. Let us write all what we discussed for rights issue. Okay. Write down. These shares are generally issued at a discount to the market price. Thereby implying that a hidden bonus element exists in such rights issue. Along with issue of shares at full consideration. At full consideration. Okay. Ind AS 33 requires bonus components to be retrospectively adjusted. To be retrospectively adjusted from earliest reporting date. From earliest reporting date, whereas shares issued for consideration to be taken only from date of issue. The following procedure needs to be adopted. Step 1, calculate theoretical X rights price. That is pre-write shares into pre-writes price plus write shares into rights issue price divided by pre-write shares plus write shares. So this becomes your theoretical X rights price, which is the first step. Step 2, rights adjustment factor. Rights adjustment factor, which is equal to fair value prior to date of exercise of rights divided by theoretical X rights price. Step 3, you have to multiply the pre-write shares. Multiply rights adjustment factor with shares outstanding. Prior to date of exercise of rights. Date of exercise of rights. No adjustment of rights adjustment factor needs to be done to write shares or any other fresh issue after the rights, which is obvious. Okay, so that takes care. So once you have finished writing this, let me know. We shall then proceed further. We shall then proceed further. Okay. Soham, the syllabus for November 23, I mean, I cannot commit right now. This is for May 23 attempt as far as I am aware. So May 23 depends. I mean, my sessions get over somewhere 2 to 3 months before normally. At least 2 months before, I suppose. I'm not very sure about the timelines because this started in COVID. And since it started in COVID, all the timelines had gone for a toss that time. Of late, I think at least 1 month before probably they conclude, maybe. Not very sure. Okay. Yeah. What I know is, I think it's done fairly in a comprehensive manner. Okay. So that should kind of take care for your examinations. Okay. So that is done. I presume that you guys will be doing the questions on right shares. Okay. Now we move on to adjustments to the numerator. Okay. So now we come to the next part. You can write this later. Net profit attributable to equity shareholders. So now this is the next part, which is slightly important. Okay, which is slightly important. So when I talk about net profit attributable to equity shareholders, what do I mean? Sir, it means net profit before tax. तो आ ही जाता है. From here you deduct the tax. So that gives you net profit after tax. Now, from the net profit after tax, ideally, we would deduct something known as preference dividend. This is what you had studied when you did AS20 to arrive at net profit attributable to equity shareholders. Ideally, you would have to deduct this. This was the story under IGAAP. This was the story under IGAAP. But if you look at Ind AS, the question that Ind AS asks is, first of all, are preference shares equity or a financial liability? That is the first question we'll have to ask. And more often than not, in fact, even if you look at the Companies Act, I don't think we have irredeemable preference shares being issued. They are mandatorily required to be redeemed. And therefore, from the perspective, if you look Companies Act purely, all your preference share capital has to be redeemed within a maximum period of 20 years. And since it has to be redeemed within a maximum period of 20 years, more often than not, preference shares would typically form part of financial liabilities rather than equity. And if they are a financial liability, using effective interest rate, we will be determining the finance cost. And the finance cost would typically be deducted prior to NPBT. And therefore, there is no further adjustment that is required. There is no further adjustment that is required in respect of preference dividend because the finance cost based on effective interest rate is already deducted when I am arriving at net profit before tax. So therefore, where the preference shares are a financial liability, no separate adjustment is needed under Ind AS for preference dividend. It's already considered. It's already considered. Okay. But suppose remotely, now forget Companies Act. We are in Ind AS. Suppose there is a chance that you issued a preference share which is irredeemable with discretionary dividend. Irredeemable matlab kya? You will never be able to redeem it. And discretionary dividend means when the company decides to issue dividend, you will get the dividend. Otherwise, until then, you will not get the dividend. So basically, you are meeting the requirements not of a financial liability, but of an equity. And in such case, the preference shares would be classified as equity, and accordingly dividends payable to them would then be deducted after net profit after tax to arrive at net profit attributable to equity shareholders. Not only that, even the premium that you pay for redemption of preference shares, the premium that you pay for redeeming these preference shares, that also would be redeemed, that also would be reduced, though such premium actually goes and sits in your securities premium, or it is met out of the reserves. In spite of that, we will have to reduce it because that much reserves have ultimately come down for the equity shareholders. That many reserves have ultimately come down for the equity shareholders. Is it okay? So this is the adjustment relating to preference dividend. It depends on whether my shares are redeemable, or whether they are financial liability, or whether they are equity in nature. Okay, so that is the determining factor behind the dividends. Okay. Now coming to early redemption or conversion of preference shares. Early redemption or conversion of preference shares. Now see, early redemption or conversion of preference shares, what the institute does is what I will explain to you. Okay, what the institute does is, any premium or discount on early settlement, if it is on account of early redemption, it would have been typically adjusted in the retained earnings, and therefore a separate adjustment needs to be done. Whereas in the case of early conversion, it would have been adjusted in finance cost, and therefore no further adjustment is needed. Okay, so we stick to this for the time being, but ideally it depends on whether the instrument is originally classified as a financial liability or as equity. If it is a financial liability, regardless of whether you convert or whether you redeem, the premium would always form a part of financial liability, of finance cost. And in the case of classified as equity, whether you convert or redeem early, the premium that you pay would be treated as what you can say, part of retained earnings, and therefore you would have to do the adjustment. But we stick to what the institute has done. We'll be writing to the institute. Let us see. So I will be giving you guidance based on what is there in the study mat. Okay. So that is your adjustments to the numerator. Okay. The last part of discussion today. Okay. So now adjustments to the numerator. We started off with rights issue. First we discussed basic EPS. In basic EPS, we saw this. Now we give the next heading. Numerator of basic EPS. Numerator of basic EPS. Okay. Net profit attributable to equity shareholders. How do I do it? Net profit before tax. You can note this down. Less taxes. Which tax? Current tax plus deferred tax. Current tax plus deferred tax, both. So this gives me net profit after tax. This gives me net profit after tax. Less preference dividend. That gives you net profit attributable to equity shareholders. Preference dividend, other payments to preference shareholders. For example, premium or discount on redemption of preference shares. Okay. So we'll put a star here, because this depends on whether they are classified as a financial liability or equity. Okay. So preference dividend. preference dividend okay. Preference shares classified as financial liability. Preference shares classified as equity. Two things would happen. In this case, finance cost would be computed based on effective interest rate. Effective interest rate with preference dividend being just a payout. Being just a payout. Okay. So therefore, preference dividend which is paid is just going to be a payout. It is not hitting the P&L anywhere. What is hitting the P&L is the finance cost. So therefore, since finance cost is already deducted, comma, is already deducted while determining profit, comma, no separate adjustment is needed. No separate adjustment is needed. Okay. So this takes care of preference dividend. Okay. Classified as financial liabilities. Okay. Next one is classified as equity. Preference dividend would be an appropriation within retained earnings. Retained earnings. Since it is within retained earnings, it would not have gone to the P&L. And therefore, do we have to deduct it? Yes, you will have to deduct it. Okay. To be deducted separately. Separately in calculating profit. By writing in calculating profits for equity shareholders. For equity shareholders. Okay. Have you understood this part? Have you understood this part? Yes. Have you guys studied financial instruments? Have you studied financial instruments? Like, what is your comfort level? Okay, all clear. Fine. So preference dividend deductibility would also depend on first one. cumulative preference shares deducted each year irrespective of whether declared or not, because it gets accumulated. Okay. Non-cumulative preference shares deducted only if declared or paid. They tell you in the question, either of the two during the year. Okay. Okay. So I see. So you still have a financial instrument session. Okay. I don't know then how I will touch upon financial instruments. Anyways, whatever little I can do, I will do it. It will come in the third class, mainly the financial instruments part. Okay. So you've written this down? Yes. Done. Okay. Have you noted down? So फिर we move on to the last part and then let us proceed to Ind AS 102, that incremental borrowing and all is left, no? So I want incremental value in case of modifications. So that I want to do just one question to give you comfort. Okay. So that takes care of preference dividend. We then move on to the next one. Premium or discount on early settlement of preference shares. Three seconds. Okay, note this down. Done. Okay, so let us then proceed. Early redemption. Early redemption would have been adjusted in retained earnings by the entity. Premium that is paid on account of early redemption. Okay. Since does not impact net profit after tax, comma, separate adjustment needs to be done from profits while calculating basic EPS. Okay. And early conversion would be regarded as finance cost in the statement of P&L. Since the expense is already considered in net profit after tax, comma, no further adjustment is required. Okay. All right. So this is how it will be treated. But ideally, the treatment should be based on whether your preference share is a liability or an equity. Depending on that, premium on redemption or conversion would be a finance cost or adjusted through retained earnings. But this is how the institute has done. So we stick to this. Let us see if anything comes up, then we can discuss, we can amend it later. Okay. Let us see. But as of now, you stick to this because this is how the questions are done. Okay. All right. Numerator less. So in this case, first one is preference dividend. Second is premium or discount on early settlement. Third one is any other payment which would be deductible from P&L, but also deductible from securities premium. Example, premium on redemption, comma, expenses towards issue, etc. Okay. So these items, these are the three categories which will have to be considered separately while determining your net profit attributable to equity shareholders. Okay, these are the three parts. So first one was preference dividend, second one was premium on redemption or conversion, and third one is any other payment which would go to P&L, but also it is permitted to put it under the other this thing. You will be putting it under other components of equity like securities premium, etc., etc. Okay, so that takes care of the EPS part for today. Okay, that takes care of the EPS part for today. Quickly, we will just revisit yesterday's sessions. Okay. Is today's Ind AS 33 understood first of all? Have you guys understood today's Ind AS 33? I'm more concerned about that. Have you understood today's Ind AS? Yes. Please let me know. समझ में आ गया आपको? Okay, fine, great. So let us then proceed to yesterday's cash plans. I mean modification. Okay, so let me just open up the discussions. ICAI Ind AS 102 classroom notes 33 to ho gaya. We were discussing assignments. Yes. Okay. What will be treatment of C? We will deduct it. Okay. We will basically all the three Kaushiki are deductible from the net profit after tax, depending on whether it is a equity item. If it is an equity item, see what happens. Premium on redemption. Where would you take it? You would take it to securities premium. That means it has not come to net profit workings. So you will deduct that premium separately. That is part C. Preference dividend. If your preference shares are an equity, then preference dividend would not form part of finance cost. So you will deduct it separately. And then the third part is that premium on early conversion or redemption. So depending on that, if what has gone to other equity, you will have to deduct it separately in determining the net profit attributable to equity shareholders. Okay, so that takes care of that part. Okay, we have questions, don't worry. I'll be discussing that question on Tuesday and then moving forward. Okay, so EPS aaj ke liye to ho gaya. Let us then proceed to 1 second, please. I will just, where do I keep this? Okay. Accounting for non-market linked, market linked modifications in exercise price. Okay. What have we written in the last part here in yesterday's class? Group SBB plan we discussed. Actual vesting, changes in vesting period. Okay. All right. Group SBPs also we discussed. Good. Calculation of EBE, cash option. Okay. So this was equity with alternative. I did a question for you on that. Did we write a note on cancellation? I don't think we did, but we did a question, right? We did a question. We did graded vesting. Okay, fine. All right. Just recapping what we discussed. Okay. All right. Give the heading. Subsequent modifications in exercise price. That is repricing of options. Repricing of options. Okay, fine. So now management can subsequently change the exercise price. See, exercise price means the price that the employee has to pay in order to exercise the option. Okay, so this price can be modified. It's ultimately decided by the management, and ultimately management can alter. Now we will be considering that modification which is beneficial to the employee, because that will result in an expenditure for the entity. The converse is not true. If you give a worthless option, okay, if you give a useless modification, nobody will exercise that modification. And because nobody exercises such a modification, we will ignore that. So our main requirement is consider those modifications which is giving rise to an incremental fair value of the option on the modification date being positive. So what is that incremental fair value? We will see just now. Okay. Management can subsequently change the exercise price and the impact of such fair value can be quantified by calculating incremental fair value on modification date. On modification date, which is equal to fair value of revised plan. He's changing the exercise price. With change in exercise price, the fair value changes. So the revised fair value on modification date. On modification date. Less fair value of original plan. Fair value of original plan on modification date. Sir, you had told us not to modify the fair value which we had taken on the grant date because it is through own equity and own equity is never remeasured. Agreed. So the original plan remains as it is. The modification is treated as a new plan for which we are taking the use of incremental fair value. Okay. For which we are taking the incremental fair value. The incremental fair value can be positive in cases where modification is beneficial to the employees. Where such incremental fair value is, just note this down. Just note this down and let me know if you have done. If you are done with noting, let me know. The incremental fair value can be positive where such incremental fair value is negative, comma, it is taken as nil since options cannot be negative. So accounting treatment original plan. Continues in original manner without change. Second, modification. Regarded as new plan with incremental fair value spread over remaining vesting period. On straight line basis. On straight line basis. Okay. Only if incremental fair value is positive. Okay. Only if incremental fair value is positive. Done? Noted down? Yes, 10:32. Everybody noted down. So then we shall proceed to the problem. Noted, guys? Done. Okay, fine. So now coming to this one. Okay, I had told you to try it. Anyways, I'll be doing this question. Okay. So QA had on 1st April 20X1 granted 1000 share options to 2000 employees. The options are due to vest on 31st March X4, provided the employee remains in employment till 31st March X4. So this is a service condition. Okay. On 1st April, the directors of the company estimated that 1800 employees would qualify for the option on 31st March X4. So this is on the grant date. This estimate was amended to 1850 employees on 31st March X2, that is end of year 1, and further amended to 1840 employees on 31st March 20X3. On 1st April X1, the fair value of the option was rupees 1.2. Okay. So let us do this. This is question 3. Fair value of options. You are given a series of fair values in this question. So कौन सा लेना है, that becomes important. 14X1 is your grant date. On this date, the fair value was 1.2. Okay. The fair value increased to 1.3 on 31st March 20X2. 1.30. Okay. But due to challenging business conditions, the fair value declined thereafter. In September 20X2, when the fair value was 0.9, the directors repriced the option, and this caused the fair value to increase to rupees 1.05. Okay. So 30th September 20X2, it was rupees 0.90 original plan, repriced the options, so it became 1.05 under the revised plan. Okay. Trading conditions improved in the second half, and by 31st March X3, fair value was 1.25. Rupees 1.25. QA Limited decided that the additional cost incurred due to repricing of options on 30th September X2 should be spread over the remaining vesting period from 30th September X2 to 31st March X4. ये sentence नहीं भी दिया होता ना, even if this sentence was not given, this was what we would do. Okay. So ये sentence ऐसे question का size बढ़ाने के लिए दिया है. हम यही करते थे even if this was not given. The company has requested you to suggest the suitable accounting treatment for these transactions as on 31st March 20X3. Okay. All right. So which fair value becomes relevant for us? First one is the fair value on the grant date. This is spread over 3 years. Okay. Spread over 3 years. Easy. Okay. No change in this. एक बार ये आ गया, हो गया फिर. Okay. Next one. There is a modification. Now this modification has resulted in repricing the options. Revised plan 1.05, original plan 0.9. So rupee 0.15 positive, it is a revaluation. Rupees 0.15 spread over 1.5 years. Sir, which 1.5 year? 30th September X2 to 31st March X4 to 31st March X4. Spread over 3 years means which 3 years? 14X1 to 31/3 X4. Okay, so this is how the options will be spread over. Okay, so this is the first step, fair value of options. We then move on to calculate EBE. Calculation of employee benefit expenses. Calculation of employee benefit expenses. What is the question that they have asked? Company has asked you to suggest the suitable accounting treatment for the transactions as on 31st March X3. Original plan 31/3 X2 31/3 X3 31/3 X4. New plan 31/3 X3 31/3 X4. Okay, we don't need this. I'm not cancelling because I'm changing the option. I'm cancelling because question has not asked the treatment on 31st March X4. So I'm not considering it. Okay, not asked. Not asked. Only for that reason. Don't take it as standard, etc., etc. Okay. So now number of employees. Number of employees. कितने हैं? Estimated 1850, 1840. Okay. 1850, 1840. Revised also, it will be 1840. This is end of vesting. Your estimate multiplied by options per employee. भाई कितने ऑप्शन दिए हैं? 1000 शेयर ऑप्शंस. 1000 into fair value रुपीस. कितना है? ये तो ग्रांट डेट के हिसाब से ही चलेगा. दिस इज द ओरिजिनल प्लान 1.2 1.2. Then you have modified, so this will be incremental. Okay, this is again 1000 options only. Okay, so all you need to do is now total this. So 1850 into 1.2. So 22,20,000. 1840 into 1.2. 22,08,000. 22,08,000, and this is 2,76,000 rupees into pro rata. Original plan was for 3 years. This is for 1.5 year, out of which half year is past. Half divided by 1.5. So EBE till date 7,40,000 14,72,000. 14,72,000. And this is 2,76,500 divided by 1.5, 92,000. Less recognized earlier. 0, 7,40,000. 0. EBE for current year. For 7,40,000, 7,32,000, 92,000. Total EBE for current year is 7,40,000 plus 92. Total EBE for year 31,320x3, 7,40,000 plus 92 is equal to rupees 8,32,000. Okay. So this is how you are going to present the answer in the case of modification. In the case of modification. Okay. Have you guys understood this part? Yes. Modification, did you understand? We'll just write the small note on cancellation and then we are done. Have you understood? Yes. Okay. Kaushiki followed. 7,32,000 is no 31st March X2, no, 1 second, X3, sorry, 31st March X3. Kaushiki, 1st April X1. So this is year ending X2, that is the first year. Year ending X3, that is the second year. Year ending X4. X4 they have not asked, so that will not happen. Okay, then moving on to the new plan, 31st March X3 it has changed. X4 they have not asked, so we have not calculated. We have not calculated. All right. So Soham is asking, sir, the actual option moved from 1.2 to 1.05. So there is no benefit in totality. From a perspective of the organization, there is no benefit. But remember what I told you. The fair value of 1.2 would have factored all these things which could happen. And therefore, in the value of 1.2, all these impacts are given. Only thing is, because the repricing does not represent an estimate, it is an actual repricing. The management has actually changed the price of the options, and therefore we have to give an impact. We have to give effect to that. That is why we are looking at the incremental fair value on the revised or the modification date. Okay, that is why it becomes important. Okay, all right. So we do not look at whether we have benefited or not. What we have to look at is the positive matter. We will have to look into it. The incremental fair value. Original option continues to exist. Original is not getting shut down. Okay. All right. Kaushiki, that is 31st March X3. I hope you understood. You're telling me something. Wait 1 second. Okay. आज किधर किधर ध्यान रहता है? 7,32,000 plus 92,000. 8,24,000. Thank you. Thank you. Okay. So 732 plus 92. Okay. So that takes care of modification. We've done the question also. And just write a small note on cancellation of options. We have seen a problem yesterday. Cancellation of options. Cancellation is, अरे किधर किधर ध्यान रहता है, is for me, okay, not for you. Okay. Cancellation is regarded as immediate vesting. As immediate vesting. Okay. That is entire EBE based on fair value on grant date is booked immediately. Booked bolo ya written off bolo, anything is fine. Or written off immediately in the year of cancellation. In the year of cancellation. Further, in the year of cancellation, we will take the number of employees on the date of cancellation. Yesterday's problem, estimate was 8, but in the year of cancellation, it was 9. So 9 employees we had considered, which is correct. Okay. On the date of cancellation. Immediate vesting is similar to shortening the vesting period. Shortening the vesting period. In some cases, a cash compensation could be paid to the employees which is calculated as under. Not calculated, which is accounted. Cash compensation up to fair value on the date of cancellation. Adjust from SBP reserve to the extent possible. Excess, if any. Cash compensation less fair value on cancellation date. If there is anything excess, loss on cancellation transferred to P&L. Typically, there will be a cash compensation because the company has breached the terms of the option. Okay. And finally, balance, if any, in SBP reserve will be transferred to retained earnings. Okay. You cannot keep SBP reserve balance and cancel the options. Okay, then the reader will be confused. एक तरफ बोल रहे option नहीं है, दूसरी तरफ आप SBP reserve रख रहे हो. So the reader of financial statements is going to be confused. Okay, so that is why best job is close the SBP reserve and transfer to retained earnings. Okay, so with that 102 is complete in all respects. Nothing is left out. Hopefully EPS also we should conclude by Thursday. Okay. All right. So done. Did you guys understand? We had done this question yesterday. Try to go through it today and you will be in a position to understand. Yes. You can go through the entire presentation also, which is about 90 plus pages. So you should be able to understand. Okay. So that's it for today. Anything else? Any doubts, constructive suggestions, criticisms? Way of teaching needs to be improved. Is it fine, slow, fast? Okay. Please feel free to give your feedback to the institute. Okay. Because then we can work on how better we can deliver to you. Okay. Because ultimately, if the faculty does not deliver, the students are going to not get the benefit of this. Okay. So if there is anything from my side, please feel free to give the feedback to the institute. I will come to know. Okay. So that takes care. At the same time, whatever feedback comes to me, I'll not know the name of the student. So just feel free to give your feedback. Okay. So we can work on it. And see you guys. Take care. Have a nice Sunday. Thank you, Soham. Thank you, Aniket. Thank you, Kaushiki, Manini, everything. Have a nice Sunday. I ate up 4 hours of your Sunday. Yes, the remaining day is still there. Have a nice weekend. Okay. And see you guys on Tuesday. Thank you. Thank you.